Hey guys, so in this video I'm going to quickly try and explain as fast as possible how I personally go about dollar cost averaging for cryptocurrency investment in order to get as big returns as possible for someone who doesn't want to look at the market all the time and is also, not like a crazy over the top investor, right? This is something that every single person, regardless of your experience level or how much money you have, you can use this method to basically get long-term big gains for hodling good cryptocurrency projects or investments. Okay, so um, this is really important right now, I think, just given the state of the current market, right, where we've seen a large, correction in cryptocurrency prices, and this is really the time to start taking advantage of discounts, right? We want to be taking advantages of times where prices are much lower than its all-time highs, and this is where dollar cost averaging or this strategy really becomes useful. So I'm going to explain how I personally do it, okay? This isn't the only way to do it, but this is kind of the way that has worked out for me, and I'm just going to share it, but I'll also explain the other kind of ways that you can do it. So just to quickly explain, if you don't know, what dollar cost averaging simply means is having a set amount of money that you're choosing to invest, let's say it's $1,000, and then taking that amount of money and basically making it into small chunks and investing it at certain intervals, okay? This interval could be, for example, based on time. So you invest, let's say, out of $1,000, $10 every week into a asset, whether that's Bitcoin, Ethereum, or gold, or whatever, okay? Another way that you can do it, and the way that I personally prefer to do it, is based off actual price and support and resistance, and just actually based off my chart analysis. I think that this is a slightly better way because it ensures that you're going to probably get larger, better returns. But either way really works. It doesn't really matter. But I'm going to show you how to do it based off price levels. Okay. So to get into this, okay, I'm going to go through the steps that you basically need to do in order to execute the strategy, and then I'm going to kind of show you how to do it. And what I have here is actually a Google sheet where I basically can calculate the amount that I'm going to invest, where I'm like at what price I'm going to make these investments at, and what returns I can expect. Consequently, when you fill out the sheet that you see here, it's going to kind of give you that almost like a plan that you can follow. So you don't start freaking out when the market, you experience those crazy crypto ups and downs, that crazy volatility. This really will help you keep your eyes on the prize in terms of, getting the returns that you're looking for. And then, eventually actually making some good money off the cryptocurrency market. Okay. So I've outlined the 6 steps here that you need to follow in order to dollar cost average successfully. So the first one is choose the project that you want to invest in with strong fundamental value. Okay. Now, I know that this sounds really, kind of like something that everybody says, but it's true. And it's especially true with dollar cost averaging. You need to choose projects with good fundamental value. You cannot, I repeat, you cannot do this with shitcoins, okay? I know it's hard for people to imagine, especially if you're new into crypto, but I was part of the last bull run. I saw so many altcoins that were, super highly valued in 2017 that right now don't even exist anymore. There's a very, very, very high probability that a lot of the altcoins that you currently like right now may not even be in existence or be trading 4 years from now, okay? And the dollar cost averaging investment strategy is really for that kind of longer term period, okay? At least 2, 3, maybe even 4 to 5 years, okay? So you really want to choose a project with strong fundamentals, okay? Whether that's Bitcoin, which already had, it's pretty clear that the fundamentals are strong, Ethereum, so forth, so forth. It can be an altcoin too, but again, you just have to be very, very assured in yourself that that coin has strong, strong, strong fundamental value. Okay, it would have worked, for example, with Aave, right? Aave was around in 2017, but at the time it was just basically an idea. I mean, for lack of a better word, right? But now it has a working product and everything, and the fundamentals were obviously strong. The project was obviously good. The team that they have was obviously good, and you could have dollar costed averaged into that and made huge returns. Okay, but you really have to do the research for yourself. Read the white papers, do the research, look into the team, look into the project, etc., etc., etc. Okay, so anyway. First step one, choose the project that you like. For the sake of this video, I'm going to just do it with Bitcoin, but let's say that you choose Bitcoin, okay? Okay, so we have our project now, Bitcoin. The next step is select your target price and the amount that you want to invest, okay? So what I mean by target price is at what price level do you think that Bitcoin, in this case, could actually reach, okay? Now, I'm oversimplifying it because obviously it's actually more about market cap instead of price level, but you get my point, right? So do you think that Bitcoin can reach $100,000? If so, then that could be your potential price target, right? So that's the price that you want to hit where you're going to eventually take your profits, okay? Maybe it's 150K, maybe it's 200K, maybe it's only 70K, whatever. It's totally up to you. You got to do the research for yourself and determine what target price is realistic for example, Bitcoin or whatever project it is. What is the price that it could hit? Okay, so for the sake of this video, I'm going to say that I think that Bitcoin is going to hit $100,000. Okay, then you also need to choose the amount that you want to invest. Okay, so obviously, depending on your financial situation, the amount can really differ. It could be $100, $1,000, $10,000, whatever you feel comfortable completely forgetting about and not afraid to lose. Okay, that's the only two things that you need to consider. You need to be comfortable, like the amount of money that you choose, you need to be comfortable essentially throwing it away. Okay, because of course we never know. Like this isn't a 100% guaranteed strategy. We never know that, for all we know, something crazy could happen with the blockchain on Bitcoin, and sure enough, Bitcoin becomes obsolete. Who knows? Okay, so you have to be 100% comfortable with essentially throwing away that money. Okay, just make sure that you choose an amount that's also not totally pointless. Okay, what I mean by that is, let's say if you're going to invest $100 at, let's say, at a price level of 50 and your target price is 100, making another $100 isn't going to get you anywhere. Okay, that's not investing. Okay, you need to also make sure that you're choosing an amount of money that makes sense for you to be investing at. Okay, so I would say that at the very least you want to have at least a few $1,000s for this strategy to really bear some fruit. But that's just my personal opinion. You can choose whatever amount you think is good for you, and based on once you go through the whole process, you can determine if the amount of money that you're going to make is something that is substantial enough for you. Okay, so do those two things. So for the sake of this video, I'm going to say that we're going to have $10,000 to invest. Okay. The third step is to determine the price levels that you basically want to start investing at. Okay, what I mean by that is, so for example, if we go to the chart, look at Bitcoin. At which price levels do you want to start putting money into Bitcoin based off your target price, right? So let's say our target price is $100,000, which would be somewhere all the way up here, right? Just for the sake of the video, I'm going to zoom out, right? Which means that, for example, if you invest $1,000 at a price level of 50,000, right? You're basically going to make 2,000, a total return of $2,000, and you're going to make $1,000 profit, right? So is 1 to 2 enough of a risk to return for you? Okay, you need to determine whether that's right for you. Personally, for me, I think that's not terrible, but not that great. And knowing the cryptocurrency market and how volatile it is, I'm personally would aim a little lower, but that's something that you have to determine. Okay, so let's say that your price target is $100,000. I am looking at the chart and I see that now we're below a key a key point of price, right, which was around $40,000 to $41,000, right, where we had this initial resistance, and then we broke through, and right now it's proving to be resistance again, right, as you can see here in the current price. So what you want to do on the chart is you want to determine where these certain price levels are, okay, because this is typically where there's going to be periods of consolidation, and then you're going to see big up or down movements. That's why it's very important to invest at these price levels, okay? If you invest at these price levels, you're essentially kind of optimizing the amount of money that you could make in return, right? You're kind of increasing the chances that you're basically buying at like a low point in the downtrend, and then it gives you also a chance to, on an uptrend, it also gives you a chance to kind of buy where people are consolidating and then get that big up. Okay, so for example, let's say I start feeling comfortable investing at the price level of 40,000 right here. So I can determine like this is a good level. I'll go to my chart tool, use the horizontal line, and draw it out like I did there, right? And you can continue to do this going down Bitcoin's price, okay, based off, again, support and resistance. So I can also see that we have a strong support around 34,000, right, based off the previous price action here, and where we're kind of seeing it as support right now. So this could be another level that we would want to buy at. If we go further below, it's clear that at where I've drawn this purple line, 30,000 is another key support level, so this is maybe another price level that we want to buy in at, and so forth, so forth. You can continue to do this. If we go here, it's clear that 25,000 is probably a good price level to buy at, right? So you maybe want to place your buy slightly higher, like 26,000, right? But you get the idea. So forth. Below that, 20,000 is another obviously very, very important level. You can draw your line there. That was obviously the previous all-time high, which typically acts as extremely strong support. And in Bitcoin's history, we've never really gone down past the previous all-time highs level, right? Though I think this time, who knows, it could be a bit different. But you get the idea, right? So you're kind of marking out these key support levels, okay? And these are the levels that you're determining, or the intervals where you want to make your investments. Okay, so that's what you need to do. If it's with Ethereum, you do the same thing. You go through the Ethereum chart and you determine where are the key support and resistance levels or price levels that you would be comfortable starting to make your investments at. Okay, so that's step 3. Step 4 is, now that you have these levels that you're comfortable at, right? So, okay, you decided, okay, if the price is 100,000, I'd be interested to start investing at 40,000, which would be a 60% decrease from the top, right? Now you have that level, and now you have also the price, the support and resistance levels below that, right? For example, at 40,000, 34,000, 30,000, and so forth. Then you can start filling out these levels into the chart, and then into the sheet. Sorry, not the chart. Into the sheet that I've created here, the dollar cost averaging calculator, and then you can start basically designating a certain amount of that $10,000 or whatever amount of money that you want to invest into the market. You can start designating a percentage of that amount to each level. So I'm going to just give you a brief example with Bitcoin. Okay, so let's say that this is Bitcoin here. Sorry if this is a bit slow, guys. So I have on the sheet here, I basically have 6 columns. The first one, and the first 3 are the ones I want to look at right now. So target price here is the target price that we're aiming for. So let's say it's $100,000, right? $100,000 per coin. Fill it out, right? So we can fill it out here, 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 here. Get the idea. Now, the purchase price is essentially the price level where you want to make an investment. So as we determined just right now, we can start at $40,000. Then also at $34,000, $30,000, at what was it, 25? Let's say $26,000, $20,000, so forth. Okay, so let's just do these 5 levels from now. Okay, let's say these are the 5 levels where you want to start making your investments in, right? Given that you know that Bitcoin is an asset that continuously increases in price, right, over time, over a very, very long time, and you're aiming for a target of $100,000, right? I'll delete these two for now, these rows for now. Let's get this here. Okay, so now let's say you wanted to invest a total of $10,000, right? And you have these 5 price levels where you want to invest at. Now you can start designating the amount, the percentage of that $10,000 that you want to invest at each of these price levels. Okay, so let's say, for example, at 40,000, you want to invest, something like you want to do a $2,000 investment, right? Say, and then at 34,000, you want to do a $2,000 investment, right? So forth. Maybe you want to do a designation where it's 20%, 20%, 20%, 20%. That's very easy, right? That's probably the simplest way. You can also do it in a way where you kind of do smaller amounts at higher levels and increase the amount as it goes down. This is going to essentially optimize the amount of money that you're going to get in return. But of course, this also, because sometimes you can't be sure that we're actually going to hit a price level of $20,000. I think we will at some point in time. I'm sure we will, and especially in the bear market. But let's just say you're not really sure, right? So that's always the risk with that strategy, but it would give you a bigger return, right? You could do something like 1,000, 2,000, then here you can go like 3,000, that would be 6,000, or sorry, let's do it like 2,000, that would be 5,000, then 2,000 and 3,000, right? That would be a total of 10,000. All right, we can also put a sum formula here, which makes it easier, right? So now that you put those investment amounts in, right, you then with this calculator, you can actually see what percentage gain that you're going to make, what is going to be the total return, and what is the actual profit that you're going to make, right? Total return, this will be total return for that particular price level. So for example, if in this example, right, if you invested $1,000 at 40,000, 2,000 at 34,000, 2,000 at 30,000, 2,000 at 26,000, 3,000 at 20,000, right? These are the total returns. So this is including the initial investment that you're going to see and the total profit that you'll get. So for that $1,000 at 40,000, the $40,000 price level for Bitcoin, you would make a total profit of $1,500, okay, for a gain of 150%. And to see the total profit you're going to make, you just run a sum formula. Boom. So basically for that $10,000 investment, you'll make a total profit of $27,000 and for a total return of $37,000 approximately, right? So this is a very simple way to use that calculator, right? When you fill out all the information, as you say, step 5, run all the calculations to get your final amount. And there you can see if you invest $10,000 at these price levels and we hit a target price of $100,000, this is the amount of money that you will make. This calculator I find very, very great to use for my dollar cost averaging personally because it really helps me keep my eye on the prize, right? It's like, wow, okay, all I need to do is just lay back, wait for these price levels. Don't worry about the volatility. Don't worry about the ups and downs. I believe in Bitcoin as a fundamental project, so I believe it's going to hit $100,000. And I can also see that total return and that total profit that I'm going to make if I follow my Excel sheet, right? So you can play around with this. You can determine what is the amount that you want to make, how much you want to invest, how you want to stagger out your investments, what kind of at what price levels you want to invest at, or maybe you want to just switch and just make it even easier and just do week 1 I'm going to invest this, week 2 I'm going to invest this. But I personally like this method a bit better, just because you'll probably get a better return in the long run. But you can play around with this, and then once you have everything set, you go to the last step, which is number 6, invest. And that's it. And just wait it out and just hodl. Once you have that there, you just need to have the money prepared and start making investments, and then just wait out for $100,000 price target. When you have the sheet, It'll help you become more patient. That's really key when you're investing long-term in these markets, okay? Patience is really key because if you're not patient, that's when you start selling low and buying high, okay? This will help you essentially buy lower prices, not at the total low, but buy at lower prices and then sell high, okay? If you have any questions, please let me know. Sorry if I've missed anything. Hope that's pretty clear. I'm willing to answer any questions that you may have. But this has worked really well for me, and I hope it works really well for you. Leave a comment if you have any questions. I'll get back to you. Thanks.